everyone. Welcome to the 5th episode of TalkShaala, an initiative organized by the Industry Linkage Club of Department of Management, BITS Pilani campus. In this show, we will be interacting with faculty, students, scholars and industry experts from various domains. This is your host, Kriti Ahuja, a first-year student from MBA batch of 2025-2027, specializing in business analytics. Today we have with us Dr. Daitri Tiwary, Professor of Finance at the Department of Management, BITS Pilani campus. Ma'am holds a PhD in Financial Economics from BIMTECH and has been a forefront of financial education, research, industry collaboration. Her work bridges academic rigor with the practical applications, a rare blend that inspires both students and professionals. Ma'am, welcome to the show.
Thank you, Kriti.
Let's start from the beginning. Could you share your academic and professional journey? What drew you to finance and especially financial economics?
Kriti, it is serendipity, yes, I'm here. But I tell you, incidentally, I started my career with academics. So I was a fresh graduate, computer science, way back, and I just thought that classroom will be a fun place to be. So it was in the final year of my graduation and I had actually joined as a teacher for Army Public School. Wonderful crowd, had a wonderful principal, loved being in the classroom, and that's where I decided that yes, this works, and I'll be rather blessed to be in a profession where I am there by choice and I love it at the same time. So, but then I realized 3 months down the lane and I realized that school teaching is a little too regimented for me. I was way young back then and I thought it's time to try out newer things. But that was what I thought I have to get back to academics. Maybe not in school, maybe in higher education. And I thought, okay, let's do this. But then CAT happened, so I went for my management education. I had this very clear stream of either doing a master's in computer science or doing an MBA. And somehow I thought that it was more of a fad those days. So I thought, let's try and do something different. So I did my MBA then. 2009-11 batch, JB Institute of Management, Jabalpur. Graduated, got placed, started working. It was fabulous, but I always liked my role way back in Army Public School, and I thought, okay, classroom has to be. And then I had some wonderful teachers when I was doing my MBA, and again just like BITS Pilani, specifically the Department of Management, the entire education system that I came from, it believed in industry relevant academics. Because end of the day, that's why you're invested, right? That's why you are sitting here, I am sitting here. So then incidentally, this topic, financial economics, is from my second corporate job. So I started off as a management consultant. That used to be the dream thing those days. Okay, let's end up with a management consultancy. But sooner or later, I thought, okay, why not try to build something, make something of your own, not just consultancy. So my second job, I was with a company called Cyberome. It's now taken over by a cyber security threat management company, which is called Sophos. It is listed in the UK. So my boss then, he was the CFO, and he introduced me to something called as exchange rate volatility. So all the IT firms, they were earning in dollars or euro, and they did not know how to go about hedging, because those days rupee was what, 60 I remember 62 rupees a dollar, and it made headlines. So but my boss then, his name was Rakesh Mistry. I'm still in touch with him. He has helped me so much with my PhD thesis, but he had that vision and he said, this is rupee is gonna hit the ceiling soon, you just look at it, and we started working on that, and that was way back 2012. And that's where this subject came, and I have lived with that subject in 2 different organizations, close to 7 years, and that problem stayed with me. So I actually wanted to offer some real life solution to some real life problems, and that's how my thesis, my research and my expertise came into the picture. And there's a lot of talk, when you go out, and all the experts that we have had in our orientation or in our industry interaction, sooner or later they'll mention this. They'll mention a part of finance, they'll mention a part of economics, because that's what is driving you end of the day, and that's where all the volatility is stemming from. So it just stayed with me, and then again I could find myself back in a classroom with all of you. So that was fabulous. That worked out well.
It did. We are lucky to have you here. Were there any challenges breaking into this field, especially as finance has been historically competitive? You just mentioned that also.
Finance have been in India, like the situation is, I was blessed because both, at least 2 out of the 3 companies that I've worked for, it was a very global kind of work environment that we had. But in India, it's a prerogative of CAs, chartered accountants, when you go to typical finance roles. And those days analytics was there, but then again, end of the day, corporate finance, project finance was mostly fiefdom of the chartered accountants. But on the other hand, they, my colleagues extremely good with numbers, and I'm extremely poor in arithmetic. Like if you ask me table of 13, I wouldn't know. But then I realized that I was good at analogies. You could be like extremely good at numbers, but very bad in analogies. Like me coming and telling you we have made a profit of billion, zillion, gazillion dollars doesn't make any sense to you. But if you could tell it in a storyline that we earned 12% more in our PAT as compared to last year, makes sense, right? So that worked well for me, and I saw myself not just as a number cruncher, but maybe somebody who could go to trade bodies, who could go to the government agencies, and who could push policies by telling a story out of the finance analysis that we did. But I tell you, I have for all the people, all the young MBA grads and the B school aspirants, it's not very competitive out there because there's a dearth of good people. So I never ever faced that so-called FOMO in your language that it's so competitive. I always found that there is appreciation in the industry if you do things well, and that number of people is very limited. So worked well for me, and I'm sure it's going to work well for every one of us here if we play by our strengths.
Touch wood to that. I like that you busted that myth that you don't have to be good in numbers to get into finance.
Absolutely not, and it requires intuitive thinking. So the Department of Management, the way we run our program here, it's MBA Business Analytics, right? So crunching the numbers, I mean, your tools are already doing it. What do you do with the output?
That's right.
So how do you actually put your story across? So end of the day, we need to be good storytellers and have a very convincing picture on what we are saying, and that worked well, and that always works well.
It was a really nice answer. Finance today isn't what it was a decade ago. Technology, regulations and globalization have reshaped the industry, right? So from your vantage point, what are the most important trends you're observing in finance right now?
So for the past 2 years, there's one subject wherein we have had a lot of industry interaction, especially with, I'm talking about top tier banks, and also about even in Indian corporates and global MNCs. So from where we see it, fraud detection is going to come up. It is already there, but that's going to be one field where I know there are machine learning driven mechanisms at play, there are algos at play, but I see that given the amount of provisioning that financial institutions and also non-financial institutions are doing, fraud detection is going to be one key feature where there's going to be a lot of investment, there's going to be a lot of traction in the financial industry. Especially, I'm not just talking about retail payments, wherein you have scams and other things, but we are talking about vendor management, we are talking about supply chain authentication, we are talking about global value chains, where you want to track a product from the cradle to grave and understand authenticity of each and every part of around it. You want to get those global supply chains financed, then you need to have your checks and balances in place. So fraud detection is one such element where I see a lot of traction. Secondly, an extension of that, but again very different, I see a lot of roles. I'm sure your seniors are also doing absolutely wonderful. But if you go around, you'll have right now newer roles in AML CFT, which is anti-money laundering and countering financing of terrorism. So you have AML CFT compliance across the globe right now, and every country would require let's say not just B school graduates, but also even middle level executives who are trained in a certain way for AML CFT detection mitigations. So those processes is where again I see a lot of work yet to be done in finance. And lastly, we are in I will not say in a precipice, but we are definitely in an inflection point when it comes to the geopolitical world order. There is so much happening, like every day is there's something happening, right? So in this happening world, I feel that we still need a lot of training, lot of introspection, lot of knowledge creation in terms of risk modeling. So when it comes to volatility, not just macroeconomic, I'm talking even about firm level. Like who are your competitors, what are they doing differently, and then extrapolating all that to finance. So financial risk modeling is going to be the skill set in the coming days. And I feel that even for non-finance executives, they would need to understand these, how are we quantifying this risk? Because minus data, all you have is opinion, and nobody values that. So when you have a risk model at place, and when the system is working and you're able to anticipate not just 5 years ahead, that's impossible, but maybe 5 days what's going to happen, and then you're going to build hedges, natural hedges around things. So I feel these are the three things. So you have you have fraud detection, you have AML CFT compliance, and you have risk modeling or volatility models even at firm level. Those are the three things that's going to gain traction as per me.
And I think all three of them are really nice for even project topics and PhD thesis too.
Yeah, I mean, see, that's one thing that I think at BITS it's different because of the alumni strength and the industry linkages. PhD thesis and all the research that we do, again, they need to be grounded to reality and they need to be industry linked. Like you say, they are very good topics, but then again, people are apprehensive. Like even when I did my thesis, I remember reaching out to more than 100 odd CXOs, but getting that alignment, finding that synergy, it's quite a task.
A few years back, India's digital finance scene wasn't as strong, but after UPI came in 2016, things changed drastically. Like we know, UPI started as a digital payment platform, but it's now influencing lending, microinsurance, wealth management, and even cross-border remittance. How do you see UPI transforming the broader financial services industry in the next 5 years?
So, UPI, as we see it, yes, India, given our demographic dividend, I mean, we are the largest right now, and the sheer volumes that we have of people using it makes it enormous. But we have a much more fundamental question to answer here. What we call is financial inclusion. That do Indians here have access to formal finance, right? Are they able to use it? Are they able to avail a quality financial life? For that matter, if you simplify it, Like, do you have a bank account? That's your basic definition of an access to formal finance. Like tomorrow, if you need a transaction, it should not be like, okay, I need to give you 5,000 rupees. You take that in cash, put it in your piggy bank. Not doing any benefit. So you have a bank account. So that's access. Now you have a bank account, you never use it. You're doing all the transaction by cash. That's a waste. So then we came to usage. And finally, tomorrow you're here and you want to go for your masters, let's say abroad, and you want an education loan. Based on that account, is somebody going to give you a loan? So that's quality, right? There's some credit given to you based on the quality of the account that you have, based on your transaction history. So India as a country, like most of the developed nation, has very low financial inclusion, where access to formal financial services itself is limited. Then came UPI, and thanks to the adoption, now we have something called as digital financial inclusion, where people are actually using their phones, and even if you have a feature phone, like you have UPI Lite, and there is this vegetable vendor or fruit vendor right there who has a QR code, the sound box as we call it, and you can scan and pay and you get a message. So you don't need data essentially. In non-data format also it is working. It's there, but for the next 5 years, for us to break that ceiling, what needs to happen is, like in I think today's economic times COVID, based on this UPI transaction, now we are thinking about extending credit lines. And these people, I'm talking about bottom of the pyramid, they don't need millions and gazillions. They'll probably need a credit of 10,000, 15,000, 20,000 to get the ball rolling. And that will bring liquidity, and that will increase the economic activity that we have in the country. So the way UPI has revolutionized, it's in terms of the transparency it has brought, in terms of immediate transactions without any middleman and immediate settlement. So that has happened. We have kind of taken the right step towards digital financial inclusion. But what I see happening is also a lot of, there is still, if you move out of the borders of the Indian cities, if you go to absolute rural India, there's still a lot of apprehension around online transactions, around, even if UPI, people are there's still a cash dependence. So next 5 years, I see it will happen in terms of reaching out to the underserved, people who do not access. You and I have already adopted it, right? But what's happening in rural areas? What's happening at the bottom of the pyramid, where people don't have access, and what's happening to them? And based on their UPI transaction, will they get a loan? Will they get a credit? Will there be regular repayments? So that's something that I'd be very interested in. Will smaller firms, micro enterprises for that matter, can they get credit lines based on their UPI histories? So that is something that's going to change the tone, or set the tone for us in the next 5 years. Reaching out to the underserved, yeah.
True, because people who have adopted it also, even our grandparents who are still inclined to printing passbooks, still
printing passbooks. And if you note, especially with the recent tariff sale that has happened in the past week, so the government, the government is kind of trying to, how the government does is it invites industry consultation. So right now the consultations are going on around, we will get emergency credit lines. You're a small manufacturer, the tariffs have gone up, we will give you emergency credit line. But we will focus on your performance and focus on the sector that you belong to. Right. So, for example, there are these wonderful wig manufacturers association that we have in India. Very small enterprise, but they do wonderful. So across the globe, Indian hair known as temple hair, right? So it does so well. So, and that's such a flourishing, that it's a absolutely profitable business proposition. So they're saying, based on a sector, we will finance you. So can UPI help us in securing those exclusive credit lines based on the history, based on the transaction? That's going to be interesting to see how it happens.
Truly. India is testing the e-rupee as part of global move toward digital currencies.
Yeah.
Do you think it could make the rupee's value more volatile?
I really don't think so, because I see, again, like I said, it's not my opinion, but it's the data which is driving it. So if you look at this project MBridge, right, and this was rolled out between China, Thailand, Hong Kong. So they tried doing this CBDC, central bank digital currency, cross-border payments, right? So how and none of them actually succumb to volatility if you look at that. How I look at it is implications of e-rupee more than so there are two things. One is the retail e-rupee and other one is the wholesale e-rupee. So in retail e-rupee, what happens is you have the app, I have the app. All the national banks are now, they have started their own, like ICICI and Kotak. They all have their CBDC e-rupee apps. You made a transaction, I received it, done, retail, right? But we already have a UPI in play for that. So hence the retail adoption is low. But if I look at institutional adoption, for example, exchange settlements, for example, cross-border trades. Right now, the entire world depends on SWIFT. And SWIFT is dollarized, right? So we see any change in dollar, how it can impact us. So it's a very, very utopian scenario, very far-fetched, because we are still not talking about a de-dollarized world. But imagine that, I want to settle cross-border transaction using the e-rupee without using a dollar intervention. That would be absolutely perfect for us, right? And then again, using CBDC, using e-rupee wholesale, we are talking about a system which does not have a Saturday, Sunday, like a bank holiday. The settlements are almost real time. It's available live 24/7, right? And also, like right now, when you're paying, say, bank guarantees, and there's a time, there's a 7 days, 14 days, 21 days. All of that will not matter. And it will be more amount of liquidity in the system. There will be transparency, efficiency of the network. So that's going to be, I feel that if this project is successful, not just for us, it needs to be successful for the other countries also, else who else are we transacting with, then we are actually moving towards we have the potential to move towards a de-dollarized world. And it's going to reduce the volatility in terms that this entire dependency on dollar or on hard currencies like euro, yen, that will diminish, and we can finally trade in our domestic currencies. If this happens, I know, like I said, it's a utopian scenario, but why not? We have to first manifest for, and I'm sure, this project MBridge that I was talking about, the Reserve Bank of India is also one of the observing members to understand that what are the area which will require improvement, what can go right, what can go wrong. So I believe that we are moving in the right direction, and it will help us build something like a virtual monetary union. So, yeah.
So back to the UPI. Do you think UPI's expansion into areas like lending and insurance could disrupt the traditional bank and financial institutions?
So, coming from the data that we have, UPI has already grown at a compounded annual growth rate of 51% and more between 2013 until 2024. Right. So it has expanded, and we have not seen heavens falling apart, be it banks or be it financial institutions. So the layman understanding of thing is that it is an interface, right? So when we develop unified payment interface, it's an interface between let's say institutions who are then again engaging in these transactions. So I I really don't, or theoretically, empirically, it does not have any evidence of disrupting, let's say, banking as an industry. But on the other hand, with the UPI enabled payments or purchase channels for insurance, margins definitely will suffer, like when we are selling third party investment products or when we are selling insurance products and we are accepting direct payment or direct purchase, point of sale kind from the UPI. Definitely margins may suffer, but then these insurance for that matter or even third party products like mutual funds, they were anyways available to be purchased online, and you could directly go and buy your product. So we had aggregators present. So UPI is on the other hand just giving you some sort of an ease of transaction without eating away on the traditional financial institutions that we have.
Fair enough. Lately, there's a wave of NBFCs like Flipkart getting its own lending license, and others like FI Money, Jupiter Money, Lending Club, etc. growing fast. Can you break down what exactly an NBFC is, why scams seem to be rising in this space, and how they're pushing the RBI to tighten the rules?
So, traditionally, when we talk about financial institutions, and one almost synonymously thinks of a bank. And then comes the term called a non-banking financial company or a non-banking financial institution. So, what's the difference? Again, the bare basic difference that you have is banks are essentially deposit-taking institutions, wherein you or I or any citizen for that matter can just go and deposit your savings in that bank. And the bank will, depending on your choice, you can put it in your savings account, you can open a fixed deposit, things like that. But NBFCs are not authorized to take public money as deposits, right? So also the capital requirement is very different. Since if I am taking deposit from the public, then I'll have to ensure that I don't go bankrupt, right? So then again, we talk about different kind of regulations surrounding both banks and NBFCs. But we need to understand that even NBFCs come under the aegis of RBI. So we have a term called RE or a regulated entity. That will include your NBFC, that will also include your asset reconstruction companies, that will include your credit rating agencies, all of them, they come under the gambit of regulated entity. Now, since as non-deposit taking NBFCs as a tertiary financial channel, please understand that it's not a wave of players in the lending space which has happened, but there's a wave of new regulation which has come into play. So for that matter, what the Reserve Bank of India very, very mindfully, and to protect the interest of the Indian citizens in general, they have done is there's this Digital Lending Act 2022. So what does it say? That even if you lend, let's say lending card or whichever platform you're using, the disbursal of the loan has to happen through a bank account. It cannot happen through a wallet, right? And that kind of brings the regulation in place, because the moment you have disbursals through bank account, then there are KYCs, there are different kind of norms which anyway the bank account or the particular bank where you have an account is following. So the regulations are in place. RBI is taking cautious steps to ensure, like I said earlier, that there is financial inclusion, there is access to credit, but not at the cost of scamming the Indian public. And see, as a nation, like any other emerging market economy, we are supposed to be credit deficit in nature. Like wherever there is credit, we'll have difficulty in access that credit. So unlike industrialized nations, we have not been credit surplus for long. So credit is dearer, and there has to be some amount of let's say premium which has to be paid for it. Everybody wants softer loans, like everybody wants cheaper loans. So if these retail credit solutions are being floated, the companies are going for it. The major reason is that there is a higher adoption of e-commerce. That's where you see that we are using buy now pay later, we are using payday loans, just for let's say 3 days I want to buy a few things and then settle it later. So e-commerce is driving this growth. But yeah, since we are not having any disbursal without a bank account, definitely we are safe in terms of our regulations, safety net.
I think that would have cleared quite a few doubts. Nowadays, AI has become a buzzword almost everywhere. Do you think AI in finance genuinely is genuinely going to solve customer problems, or it is just a must-have label to attract more investors?
I'll give you a very simple example, very pertinent, yet very few people know about it. So, the Security Exchange Board of India, SEBI, it launched its own AI bot for assisting retail investors to invest in capital market. Right. Now imagine our demography. If it has to have, SEBI has to have a call center where you can call and ask, basic bare minimum layman doubts. So imagine the amount, the resource, not just resource intensivity, but the feasibility of such a thing happening. It's enormous, right? Then it has to outsource it, and then the quality goes for a toss. So instead, SEBI thought that let's have this basic chatbot where you can ask doubts. When is the expiry of this particular, let's say you're going into derivatives market. When does this expire? When or you want to know certain things about the operations. You want to understand that when will a payout happen? Things like that. So chatbot. And the magic of this bot is that what SEBI's vision was, let's have it in vernacular mediums, like in our mother tongue. So for that matter, I would be more comfortable in speaking in Bengali as opposed to, let's say, Hindi. So let's have a bot which essentially talks in Bengali or Tamil or Malayalam, whatever works, right? So it is not just the buzzword, but when we are talking about natural language processing, when we are talking about offering a service in vernacular medium, then why not? So when we are talking about reg tech, regulatory tech, let's say you have insurance claims, and given again the size of our population, how many claims do we have to process every time for vehicle insurance, motor insurance, imagine all this being AI driven. Why not? The first level of check, that's a lot of pain which is dissipated because of adoption of technology. So essentially AI in finance is coming up. It has already come up. Not many of us are aware about this, but as it is assisting every pillar of fintech to do better, to optimize its results. So that's what I think it is.
Hopefully it will grow more. Alright, enough about the world of finance. Let's talk about your life at BIMTECH, Pilani. What's your favorite spot on campus?
Oh, I'm a books person, right? So there's nothing interesting happening in my life, but I absolutely love the library that we have, and I think the beautiful part is we have a whole building dedicated to the library. It's not just a block, it's this whole space that's given to the library. Also, like the school that I come from, St. John's Diocese in Kolkata. So we used to have something like a similar library, 3 floors of library, right? So I love being there, and the fact that I'm here I've always stayed in residential campuses, but the fact that this is not just a course that wherein you come for 2 years, or you come for the 5 years UG program, or the 2 years masters program, or the BITS Dubai campus is also starting its 5 years BBA MBA integrated program. It's not just about that program. It's about the ambience that we have. Like when I go to the library, when I go to the reading room, and I don't like going to the faculty section as such. I like sitting there and reading. And then when I'm out, I hear conversations, and the entire we are missing out on life if we are not part of the conversation, right? So whatever intrigues the student, that kind of interests me. So it's mostly home and a library and classroom for me, but I like it there, and it's the appreciation that we have for knowledge in every form is what I see there at the BITS library, because there's a wide array of books in a wide different range of subjects. So I absolutely love it there.
I especially like the quote that you're missing out on life if you're not part of the conversation.
Yeah.
It's really nice. Since you've been involved in practice school, could you share with our audience what PS is and why it has become a USP of BITS Pilani or rather BITS?
So, BITS Pilani is defined as BITS Pilani. A major contribution is our alumni, right? So this time around, when I went for my practice school 1, and I had 8 wonderful stations with me, varied array of work, very, very interesting projects ranging from indoor mapping to security solutions to the Delhi police, all of that, right? So it was a wonderful time in terms that in 5 out of 8 PS stations, I worked with very senior BITS alumni. These alumni, they come from as early as 70s batches, somewhere recent in 90s batch, and it was so wonderful to meet them. So from them and with my own lived experience, what I realized that practice school is not an internship. It's a process where you are having an induction in the corporate world. And it's not an internship in the way the traditional internship happens, where you land up and then some task is given to you daily and you finish it, 2 months are over, you're back. Almost like a furlough that you have, from a jail. That you come, you have a furlough, okay, fine, and then you're back. So it's not like that. This practice school was where you have what I found very interesting is there's a project and there are deliverables. So when I'm there as the faculty mentor with, let's say, I had 29 students with me. Everybody was working as part of a real life project, and they actually delivered in those 8 weeks, right? Almost there were 56 days, right? So they actually delivered, and when it came, and they're from companies like Steel Authority of India, KPMG, our students could actually go out there and translate their classroom learnings into industry solutions. And the USP has come all the way, it has been built by our rich alumni. And they are now carrying forth this tradition and they believe it's a duty. So I kind of had that moment where they take great pride and they feel it's a duty that they're passing it on to the generations which are coming now. So 60 years of eminence, and this is what we have as inheritance. So that's the wonderful part of it.
That's an interesting outlook to the practice school. At last, any advice you would like to give for the junior batch and the senior batch as well?
it is not just for the juniors and for the seniors who are in the almost in a league of completion. And I am sure everybody is just waiting to join their organization, start working. But see, these 2 years are going to stay with you. Unlike any other stakeholder in this entire equation. So my students are always going to belong to BITS Pilani, and BITS Pilani is always going to belong to the students. So this relationship is not going to be over in this life, at least, because wherever you go, your mark sheets, your profiles, everybody is going to be endorsed by it. So when you are there, finding synergy with such a huge institution, so what matters is that you kind of let your head down and put in your efforts, but also enjoy these 2 years here on campus, because they are not going to come back. And like I always say, try to be industry relevant in your efforts, and the entire pool that we have is extremely sincere. So hence I am telling, let your hair down and just try to make yourself comfortable while you become part of the discussion.
Truly try that. I hope everybody would take some parts of the advice. And ma'am, it was really a pleasure talking to you. Thank you so much for being here. And I learned so much. I'm sure everybody would learn so much. And to our listeners, thank you so much for tuning in to TalkShaala. If you enjoyed the episode, please subscribe and share. See you soon in the next episode.
Thank you, Kriti. Thank you.
Thank you, ma'am.